Hey friends, welcome back to Making Sense of Your Market. It's Friday, it's May 2nd, 2025. I'm in our newly remodeled podcast studio. I'm super excited about this. Been working on this for a while. So I've got a podcast with my wife called The Baker and the Banker. I've got another podcast called The Happy Homeowner, and that's more for you guys. It's more for real estate and interviewing local business people and real estate professionals and investors. And so this is an upgrade that I've been wanting to make for about a year. So excited to launch this. Now, let's talk about interest rates week over week, about the same. I've said this now for the third week in a row. I like to be out on the Puget Sound fishing. In fact, I was out there in the San Juan Islands yesterday fishing for lingcod. We had an amazing day. We caught a bunch of really good lingcod. The ship is pointed in the right direction. Your boat, the nose of the boat is pointing in the right direction. It's just not really moving. So week over week, we're down just a tad, probably 6.625, 6.75. But 30-year fixed rates are still in the upper sixes, all right? We did get a jobs report today that came in hot. It showed the jobs were good. The economy is looking good, so it's kind of weird. Really volatile and weird economy that we're in right now, but that's why you have people like me to keep you on track and help you make sense of this. So rates week over week about the same. Now, last week I talked about a very misleading report on existing home sales. And I kind of helped you kind of understand and better understand what that meant. This week, the same thing. I saw an article this week dated 4/25, so it was from last week. And it said that 44% of sellers are giving seller concessions to buyers right now. Anytime I see articles like this, I go and I look at my personal business, the people that I helped this currently and then this last month, and I try to compare and see if that's accurate data. It wasn't necessarily inaccurate, but the article was somewhat misleading because if you think about it right now, builders, national builders right now dominate the housing market, dominate a lot of the sales activity right now. They're not in the business of sitting on homes. So they oftentimes will provide a lot of builder incentives to keep the price point the same, but to move product very fast. So I think that part of it might be a little bit misleading. The other part of it is, what is a concession? A concession is a closing cost credit or a credit that allows the buyer, incentivizes the buyer, and the seller will buy down the interest rate. Well, we're seeing those because of higher interest rates. But what is somewhat misleading about that is that doesn't mean anything. That doesn't mean the market is softening. And what I'm seeing in my office, now remember, I'm kind of right in the middle of, I'm on the tail end, middle to tail end of Snohomish County and middle to north end of King County. So I do a lot of business in King County, a lot of business in Snohomish County, and I sprinkle in a little business in Pierce and Skagit. What I'm seeing in King County for the most part, Kirkland, Bellevue, Redmond, Bothell, those areas is at list price or above, and it's competitive. Same thing with when you go over to the west side, the Seattle side of it. Now, when you drop into Snohomish County, certain parts of Snohomish County and Skagit and Pierce County, we are seeing a lot of seller concessions. So I think that to get the best interpretation of this data, you need to talk to local professionals. So that's where I come into play. I want to validate and verify all of these articles. You can't trust the media anyways nowadays, but I would encourage you to verify and validate those so that you don't make a poor financial decision when it comes to buying and even selling real estate. So if you need clarification on anything that you're seeing, I want you to reach out to me. I'm happy to help, and that's what I do. I was on a call this morning with a lot of real estate agents and a group of mortgage professionals. There was a lot of complaining about the market. I said this about 2 weeks ago, that March and April have been my two best months in my entire mortgage career, minus the year 2021, when mortgage rates were very, very low. I don't think when these real estate agents, these mortgage lenders today were complaining about the market, I don't think it's a market problem right now. I think it's a work ethic problem, and I think it's a marketing problem, and it's a value problem that they have. I'm not seeing this in my office. We're having a lot of fun. We're helping a lot of people. And with the amount of people that we're helping right now, I get to give you great feedback on the actual market, your current reality. So if you have any questions, I want you to reach out to me. If you're one of the people that recommended their friend, family member, coworker to us in the last 2 months, I am super grateful. We've received a lot of referrals. in the last couple of months from people wanting to get into the market and wanting to work with someone that can hold their hand and give them really great advice. And that's us. We also had a record-breaking homebuyer class this last week. We had a sold-out class, South Lake Union. We got another one coming up this next week. So if you want to come to a homebuyer class, or you know someone that wants to come to a homebuyer class and learn how to do it the right way and to win, I want you to reach out to me. Have an incredible weekend. Enjoy this weather, and I'll see you next week for another update. Bye for now.